A sharply lower day on Tuesday as we started off the market week in the grains. Ted Seifried with Zaner Ag Hedge joining us. And Ted, looked like we were trying to pull a lot of that risk or weather premium back out of the grain sector.
Yeah, you're absolutely right, Michelle. We put it in on Friday with the uncertainty of what the forecast would look like on the other half or on the other side of a 3-day holiday weekend. And then when we got to the other side of the 3-day holiday weekend, not much had changed in the short term, which is to say that we do have some concerning dryness and also relatively hot for this time of year, or above normal temperatures for this time, but not suffocatingly hot. Again, this is the beginning of June, not July. But then, looking at the 8 to 14-day outlook, once we got back from the holiday weekend, there's some cooler temperatures in there, below normal temperatures for most of the Corn Belt, and normal to slightly above normal in the West precip. So, yes, that forecast is a little bit easier to look at the further out in time coming out of the weekend, and that was allowed us to put a pretty significant amount of pressure on the grains. That also comes with quite a bit of risk off that was happening there on Tuesday.
Right. Yeah, talk about where that risk off came from, Ted, especially since we had crude oil that got just pummeled.
Yeah, absolutely. There are a number of different places. One, there's more concerns about China, more concerns about COVID cases resurging in China, maybe potential for a lockdown. So that touched crude oil and that touched soybeans. Those were two things that were really under fire there. But we have a lot of concern about what's going to happen with the debt ceiling. It seemed that when we were leaving on Friday, we were getting pretty close to a negotiated deal on the debt ceiling. But then over the weekend, a lot of the Republicans really took issue with, just basically raising the debt ceiling for the next 2 years. So now we're back to the uncertainty again. So again, that didn't help with the risk off nature that we saw on Tuesday. Certainly didn't help the bearishness that we saw in the grain markets either.
Just quick, do you see a lot more downside risk if the weather continues to look pretty decent in the extended?
Yeah, that's a really good point, Michelle, because some people are going to say that this is the time of year where we should be putting weather premium into these markets.
Right.
But generally speaking, we're trading 380 corn or 420 corn, and then we add weather premium up to $5 maybe. Well, we're already trading over $5 in December corn, and we're talking about a 2.22 billion bushel carryover. You can make the argument, and I'm not saying I am, but you can make the argument that weather premium is already built into these markets because of the prices that we're at.
All right, thanks for joining us. Ted Seifried with Zaner Ag Hedge. We'll have more Ag Day coming up.
For professional marketing advice specifically tailored to your needs, call Zaner Ag Hedge at 312-277-0113.